Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. It's a good job we have sports to allow us temporary distraction from the geopolitical mess that the US has initiated and which just seems to go on and on. A shut Hormuz and a jump in oil prices is bringing Groundhog Day. Back in the economic world, Tuesday's June CPI release will dominate this week's local data. Markets expect an elevated 4% rate, keeping the pressure on the OCR and the RBNZ to contain it. Events in the Middle East aren't helping. The next OCR review is not until September the 2nd, however. In Australia, it'll be all about their June labour market release. Markets expect only modest jobs growth and no jobless rate change. But developments between the US and Iran will remain the global spotlight after strikes escalated, impacting energy prices and interest rate outlooks for central banks. There is not much market-moving economic data expected from the US this week, but earnings season results will be watched for indicators and surprises. In Japan, they'll release trade and inflation updates. Taiwan will be interesting for its industrial production data, Korea for its first quarter 2026 GDP outcome. And Indonesia will review its policy rate again after the unusual interim hike and taking it possibly to 6%. For them, it is all about supporting their weakening currency. There is little significant data out of China this week also. However, here's something we haven't covered so far. Their June trade data for China shows that its crude oil imports are now at a 10-year low. In fact, their June crude oil imports were 11.4% lower than a year ago in volume terms. It is a shift that will have global implications. And we can also note that China closed nearly 30,000 kindergartens and primary schools in 2025. It is the consequence of the growing demographic slump we've been noting for some time. Recent data released by their Ministry of Education revealed the severe structural divergence. While early childhood and primary education is shrinking rapidly, high schools and universities are expanding to absorb a demographic bulge from earlier birth peaks. 3 Chinese airlines have ordered 95 Airbus commercial jets. This has swelled Airbus's non-US order book over rival Boeing. Airbus delivered 89 aircraft in June, Boeing 64. Boeing is losing market share fast for clients outside the US, no doubt a direct consequence of reactions to nativist policies from Washington and the risks of trade retaliation. Singapore's export growth fell back sharply and unexpectedly in June. Electronics exports remained elevated, but non-electronics exports were unusually weak in the month. Their big decliners were for petrochemicals, food and non-monetary gold. Trade with the US was especially hard hit. Across the Pacific and Canada, the spread of their enormous wildfires are becoming an international irritant. Canada is struggling to contain them. In an unusual move, the US is refusing to assist, even though Canada sends crews and supports to the US when they have wildfire emergencies. And there are also major wildfires in many US states as well. In the US, housing starts in June came in 3.6% higher than year-ago levels and brushing off their unusually weak May report. But for all the positives that some Fed districts' factory surveys have shown, these are not showing up in US industrial production data yet. You might have thought the increased local stockpiling surge would be visible by now, but to June it isn't. US industrial production rose a paltry 0.1% to be 1.1% higher than a year ago. That is its weakest increase in 3 months. Although consumers are still very negative in their sentiment there was a notable improvement in the latest survey results from the widely respected long-run University of Michigan Consumer Sentiment Survey. With a second straight month of 10% jumps, consumer sentiment climbed to its least negative reading since February of this year on the basis of easing price pressures at the petrol pump in recent weeks. All 5 index components improved, led by a significant 20% increase in buying conditions for durables, as well as year-ahead business conditions. This month's rise in sentiment was consistent across the population, seen across all age, income, wealth and political party groups. Will it last? If it truly is directly related to pump prices, then this weekend's outsized jump in crude oil prices and the turn-up in pump prices in the past few days suggest not. Today's pump prices are almost back to month-ago levels when the sentiment survey hit record lows. Looking backwards over the past month, US data has seen improvements, but these have not been enough to return the Atlanta Fed's GDP now tracking to where it was in May, so a sharp downshift is still in place. It is worth noting that consensus forecasts by mainstream economists have not reflected that retreat yet. The RBNZ also produces a GDP nowcast. After a somewhat unexpected blip up 2 weeks ago, the latest data has returned our second quarter GDP growth to a minimal level. The same for the third quarter 2026. In Australia, the latest weekend's residential auction activity was low, possibly back to levels they last had in 2018. They are finally having the housing market correction necessary to address their affordability problems. The US Treasury 10-year yield is now just on 4.55%, unchanged from this time Saturday, but down 2 basis points for the week. The price of gold has risen to $4,017 an ounce, up $12 from Saturday, but down $83 from a week ago. Silver is now just under $56 an ounce, down $3.50 for the week. Oil prices are 50 cents firmer from Saturday, up $3.50 from Friday, at just on $82.50 a barrel in the US, while the international Brent price is now just over $88 a barrel. A week ago, these prices were $71.50 and $76 respectively, so a 16% rise since then. Hormuz transits have been reduced to a trickle overnight. There have been just 2 crude tankers and 7 cargo ships exiting over the past 24 hours and 9 entering for new loads, and almost all of this traffic is Iran-linked. The Kiwi dollar is unchanged from Saturday at this time, at just under 58.4 US cents, but up 80 basis points for the week. Against the Aussie, we're still at 83.7 Australian cents. Against the euro, we're also holding at just on 51.1 euro cents. That all means our trade-weighted index starts today at 62.3, which is unchanged from Saturday, but at 80 basis points for the week. And the Bitcoin price starts today at $64,542 and up 0.8% from Saturday, up 1.4% from a week ago. Volatility over the past 24 hours has been low, though, at just on plus or minus 0.5%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.